Ethereum scaling solution tokens outperformed most cryptocurrencies following the weekend crash. This indicates greater price resilience for Layer projects built on the world's largest smart contract network. The Ethereum Layer scaling solution mantle rebounded 31% on Monday, marking the third largest gain among the top 100 cryptocurrencies tracked by CoinMarketCap. Arbitrum and immutable tokens also showed double-digit growth, while Polygon token rose 8% over the 24 hours leading up to the article's writing. Some analysts point to the growing utility of the MNT token in the Bybit exchange ecosystem as the reason for recovery after $19 billion in liquidations. Mantle has recently shown significant growth, particularly due to its utility driven by integration with Bybit, the diversity of products offered, and an impressive treasury, noted Jake Kenny, senior analyst at blockchain analytics platform Nansen. This momentum has led to the MNT token's price tripling over the past 3 months, according to a Cointelegraph analyst. Mantle's active address count grew by 117% in a week, the strongest among all LS, according to blockchain detective Satiaxt. The expansion of Bybit and the growing popularity of Mantle in blockchain are beginning to form a strong feedback loop between SEX and L, he wrote in an X post on Monday. In August, Bybit launched several campaigns and staking products for MNT, followed by a joint roadmap with Mantle outlining lower slippage trades, new payment methods, and expanded savings features. This initiative marks the start of Mantle 2.0, aimed at establishing the network as an institutional liquidity chain for tokenized real-world assets and bridging centralized and decentralized finance. Mantle is no longer just an L, but the foundation of the Bybit ecosystem. This is not just a partnership, but an attempt to dominate the ARWA market, stated a September 3x post from Delphi Digital. This update turns the Mantle token into a utility asset for Bybit. Bybit may also provide additional liquidity through grants such as the $200 million Mantle Echo Fund, intended for investing in applications built within its ecosystem. Scaling tokens for Ethereum outperformed most cryptocurrencies after the weekend crash. This indicates greater price resilience in Layer 2 projects built on the world's largest smart contract network. The Layer 2 scaling solution Mantle rebounded by 31% on Monday, marking the third largest gain among the top 100 cryptocurrencies tracked by CoinMarketCap. Arbitrum and immutable tokens also showed double-digit growth, while Polygon token rose by 8% over the 24 hours prior to the article's writing. Some analysts point to the growing utility of the MNT token in the Bybit exchange ecosystem as the reason for recovery following liquidations totaling $19 billion. Mantle has recently shown significant growth, especially due to its utility driven by integration with Bybit, the diversity of products offered, and an impressive treasury, noted Jake Kenny, senior analyst at the blockchain analytics platform Nansen. This momentum has led to the MNT token's price tripling over the past 3 months, according to Cointelegraph analyst. The number of active addresses on Mantle increased by 117% in a week, the strongest growth among all LS, according to blockchain detective Satiaxt. The expansion of Bybit and Mantle's growing popularity in the blockchain are beginning to form a strong feedback loop between SEX and L, he wrote in an X post on Monday. In August, Bybit launched several campaigns and staking products for MNT, followed by a joint roadmap with Mantle. It outlines lower slippage trades, new payment methods, and expanded savings features. This initiative marks the beginning of Mantle 2.0, aiming to position the network as an institutional liquidity chain for tokenized real-world assets and to merge centralized and decentralized finance. Mantle is no longer just an L, but the foundation of Bybit's ecosystem. This is not just a partnership, but an attempt to dominate the ARWA market, stated a September 3 X post from Delphi Digital. This update turns the Mantle token into a utility asset for Bybit. Bybit may also provide additional liquidity through grants, such as the $200 million Mantle Echo Fund, intended for investing in applications built within its ecosystem. Some industry observers suggested that Mantle's rally was also triggered by Binance platform outages during market volatility last weekend. On Friday, Binance reported intermittent delays in data display issues due to high trading volumes. Although Binance remained online, some platform modules experienced technical glitches, leading to the delisting of 3 cryptocurrencies on the exchange, including ETH in a synthetic dollar, Binance Staked Solana, and Wrapped Beacon ETH. According to a Sunday announcement, Binance compensated users affected by these platform outages with $283 million. After what happened on Binance, where people couldn't manage their positions, Bybit operated flawlessly, believes blockchain detective Finishi. He added that Bybit will lead and Mint will surge sharply. Despite rumors of market manipulation, the recent correction was undoubtedly a real market event, not just an exchange glitch, stated Marcin Kaczynski, co-founder of the blockchain oracle company Redstone. When the US administration announced additional tariffs around 5 p.m. on Friday, October 10, cryptocurrency markets became the sole outlet for global investors' shock, he added. Because other global markets were closed during the announcement, cryptocurrencies absorbed the full force of panic selling that is usually distributed across multiple asset classes, he added. Ethereum is trading around $4,102, holding the trend line and EMA support after a bounce off resistance at $4,260. Coinbase data shows an outflow of $112 million, indicating long-term accumulation despite a decline in speculative demand. Bhutan will migrate its national digital identification to Ethereum by the year 2026, which will strengthen institutional adoption of ETH. The price of Ethereum today is fluctuating around $4,102, down by 3.3% over the last 24 hours, as sellers test the support zone of $4,080 $4,100. The pullback occurs after a bounce off resistance at $4,260 at the beginning of the week, while buyers continue to defend the long-term ascending trend line that has been guiding ETH upwards since April. Now, the main focus is on whether this structural support can hold amid declining on-chain flows and new cryptocurrency adoption news. On the daily chart, Ethereum remains within its broad ascending trend, but the recent drop has brought it closer to a key decision point. The price is fluctuating around the 50-day exponential moving average at $4,246 and the 100-day EMA near $3,978, which coincide with the multi-month trend support line. The nearest resistance is at $4,254, and stronger supply is in the range of $4,540 $4,550, where the supertrend indicator turns bearish. A sustained close below $4,080 will expose deeper downside targets at $3,900 and $3,540, while holding above the current demand zone could stabilize the momentum. RC readings near neutral levels indicate a cooling phase, although the broader structure remains inclined toward constructive growth as long as support at $3,540 is maintained. Exchange data from Coinbase shows that on the 14th of October, the net outflow from Ethereum amounted to $112.45 million, indicating moderate accumulation despite volatility. This was preceded by several weeks of mixed exchange activity with frequent inflows during price rallies and sharp outflows during pullbacks. Although net inflow remains negative, analysts note that this trend indicates that long-term holders are withdrawing ETH to cold storage, reflecting sustained confidence. However, the lack of significant inflow surges also points to a weakening of speculative demand in the short term. Traders continue to monitor whether future institutional catalysts can reactivate the market, especially as the number of staking participants grows. As part of an important fundamental project, Bhutan has confirmed that its national digital identification platform will fully transition to the Ethereum blockchain by the beginning of the year 2026. The project, originally built with Yoke Cardano, will now anchor its credentials to Ethereum, allowing citizens to verify personal attributes using decentralized identifiers linked to the network's validator infrastructure. Ethereum co-founder Vitalik Buterin called this step a significant milestone toward public blockchain adoption, emphasizing citizen empowerment through sovereign digital identity. This development confirms Ethereum's growing role in national-scale infrastructure following recent initiatives related to energy markets, tokenized treasury bonds, and stablecoin settlements. Analysts believe that the fair value ranges from $8,000 to $10,000. Market strategist Ted Pillow confirmed his optimistic stance, stating that Ethereum could catch up with the M2 money supply in the fourth quarter. He forecasts a fair value in the range of $8,000 to $10,000 by the first quarter of 2026, driven by institutional trading, staking approval, and liquidity rotation from other Layer 1 assets. His post, comparing the growth of global M2 money supply with ETH price dynamics, has drawn trader attention, who view Ethereum as a macroeconomic hedging tool amid liquidity contraction. This macroeconomic scenario aligns with the long-term wick-off accumulation pattern for Ethereum, where each cycle correction has historically preceded a sharp recovery. If macroeconomic liquidity improves in the fourth quarter, Ethereum's synchronization with global money supply growth could reactivate speculative and institutional demand. The Ethereum forecast for mid-October remains moderately optimistic. The pullback to the trend line is seen as a natural consolidation phase within the current cycle. Outflow from the blockchain indicates long-term accumulation, and Bhutan's integration adds a powerful adoption factor to Ethereum's story. If ETH stabilizes above $4,000, analysts see potential for recovery to $4,550 and $4,800 in the upcoming sessions. However, losing this threshold would delay the rally and test buyer confidence around $3,540. At this point, Ethereum remains a key asset balancing between structural support and the recovery of global demand.